Welcome back to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. Today's video is one of those staple pieces that I think is fundamental, and it's the elephant in the room, I call it. And the reason we need to discuss it, and we need to have it broken down into subparts probably, and I just want to lay out the basic framework today and then build on and expand on it in the future videos is, I don't want this to become too big of a video. I know it's very easy for me to do a video for half an hour, 45 minutes, an hour long, and I'm always shocked when I finish a video and I look at it and I see that the video is an hour long, and I laugh. I laugh because I see these YouTube videos where the person refers to, they're going to teach you everything that you need to know, the pros and the cons of everything you need to know about a reverse mortgage in 9 minutes and 30 seconds. And I seem to have a hard time covering one topic in an hour. So for the coming year, the videos that I'm trying to do are going to be shorter, and you're thinking, thank God, because we don't want to go through an hour-long video. But this video, this idea of costs and expenses, it has to be explored. And we have to drill down, and we have to get into what I call the weeds, because a lot of seniors are going to talk themselves out of the idea of getting a reverse mortgage simply because they think it costs too much. And why do they think it costs too much? Well, it's not because they've explored it. It's because they've heard this echo chamber of everybody else saying it costs too much. And this repetition of it costs too much is never followed up by, what does that mean? What is too much? Number one. And number two, and more importantly, when you're paying much more than you think you should, what is the value proposition that you're getting in return? In other words, if I say to you, something costs $10,000 more than what you believe it should, and it has no benefit for you, and you don't see any features, then I understand your hesitation and your resignation to not move forward with it, because you're thinking there's no value proposition. But every time you watch a video, especially on YouTube, which apparently seems to be where everybody's now getting their information and their data from, and somebody sits there and repeats again that this costs too much, it's never followed up by, what is too much? How much is too much? And what are you not getting by paying so much? That's why I think it's relevant and important for me to discuss this topic and go in detail, because as I've referred to in my past videos, there are three primary reasons that people talk themselves out of getting a reverse mortgage. We've handled the objections of, I'm going to be off title to the house and the bank is going to be on the title, which is a way of thinking that you are not going to have any legal interests. And we've done a whole playlist on that topic. I've done another set of series on the playlist regarding the idea of equity stripping. There's not going to be anything left for me to give for inheritance. So the big unknown now is this mystery box of the cost and how much does it really cost. And for me to be able to roll that out and make it relevant for you, I decided to kind of break it down. And today what we're going to do is we're going to give you a frame. And to me, the frame is really important, because without having a proper perspective, without understanding the big picture, the trees through the forest, as I call it, then you don't see the value proposition of what I'm talking to you about. And I love working with seniors because they have a breadth of experience and they've done enough things in their life where they could refer back and have a point of reference to what I'm talking about. And just to give you a little bit of a narrative, a little bit of an idea, if you think about how many years you've been in your home ownership, it's going to be 20, 30, 40 years or more. And each one of those years that you've maintained your home, you've had homeowners insurance policy. You did it because it's required and it's mandatory, because if you have a mortgage, the lender is going to require you to have mortgage insurance in the sense of having protection and homeowners insurance to protect their mortgage. So that God forbid, if the house burns down, the bank, who's the lender who has a collateral interest on your property, which is its security, can be reimbursed. And if you think about this insurance premium that you've had on your home, on average, it's about $1,200, $1,300 a year. And how many years have you been paying this insurance premium? Well, if you had your home for 20, 30, 40 years, you've been paying it for 20, 30, 40 years. And if I say to you, that's insurance premium that you have to pay out of pocket every year, nobody's shocked by that. Nobody's surprised by that. But you have this protection, you have this insurance. Why? Well, it's the same reason you have automobile insurance. It's the same reason you have any kind of insurance. Insurance by nature is designed to shift and remove the risk liability of something going wrong from you and your potential pocket to the insurance companies. And the cost for that is a premium. We're not talking about, rocket science here. I'm just breaking it down so that it's obvious why I make the point about what the expense associated with the reverse mortgage is, so that you again have perspective. When you pay $1,500 a year for homeowners insurance, you're doing so because you understand there's an inherent risk that you want to protect yourself from, and that the lender is asking you to protect its interest, the lender's interest, by having insurance. If you go into this examples that we're talking about now with the same framework of why insurance is necessary, it's going to help you understand what we're talking about as it relates to reverse mortgages. Now, reverse mortgages are, I know, seems to be some sort of a black box, some sort of a black hole for people who can't seem to get their mind around it, but it's just a form of mortgage. It's a mortgage. The relationship with you and the lender is primarily and most similarly the same as you would have in a traditional mortgage. You still have a promissory note, you still have a deed of trust, you still have the house as a collateral. And if you watch my other videos, we've gone in full detail about all of these things and what that relationship means. The only thing that you don't have, which is not mandatory to you as a senior, is that the lender does no longer require you to make mandatory mortgage monthly obligation payments. And that freedom, that flexibility of not having to make a mandatory monthly mortgage payment is what the benefit of having a reverse mortgage is. And the reason that the bank does this is that the bank has certain assurances. One of those assurances, a big part of it, is the amount of equity home built appreciation wealth that you have in your property. And that's why if you watch some of these other videos, when I talk about this idea that you're not going to have equity stripping and you're not going to have your inheritance lost and you're not going to eat up all the equity, is because of the fact that we look at how old you are, how much equity you have, the likelihood and longevity of you staying in the house without selling it, without moving it out, or God forbid passing. And those factors are all factors that give the bank, the lender, assurance that it's not going to lose money. Another major protection that the bank has is in the form of the insurance premium. And that insurance premium is the big expense associated with the reverse mortgages. And that's why, in order for you to understand the cost, you also have to understand the benefits. And because nobody talks about the benefits, my goal is to educate you so that you understand the protections that you get, not just the lender gets, but you as a borrower also get, your estate gets, and what that translates to in terms of the reality of having a reverse mortgage to live with, if this is the best choice for you. So I want to talk about what we do know, what you do know having had traditional mortgages compared to what a reverse mortgage is. Well, the items that you're most familiar with in getting, whether you bought a house or you refinanced a house in your traditional format, was that the items included escrow fee, and escrow is just a neutral third party that facilitates the transaction between you, the borrower, and the bank, who's the lender. the escrow company is basically a neutral party that sends everything back and forth, gets the loan documents, prepares it, sends a notary to your house, you sign it, they pay off the bank, you get any money that's distributed to you. That's what escrow is. And escrow regarding, in terms of fees, whether you get a traditional mortgage or a reverse mortgage, is going to be roughly the same. Title insurance you're familiar with. It's one of those items that everybody thinks it's useless until it's necessary. And what title insurance does is that it again protects you and the lender so that somebody doesn't pop up out of the woodwork and say, I have a right, a chain to the title. I'm somehow missed on the chain of title on the deeds, and this house belongs to me. And title insurance is again another form of insurance protection that the bank requires, so that it's required to protect the bank's interest, so no third party suddenly intervenes and interlopes and says there was some sort of a miscommunication in recording of a deed 20 years ago and this house belongs to me, not to this other person. Lender fees are again something very common, very typical that you're familiar with, and there's no mystery to there. The typical thing that happens out of pocket to you as an expense is you're required to pay an appraisal fee, so that whether as a traditional mortgage or a reverse mortgage, you pay an out-of-pocket appraisal fee, and the bank does an appraisal for you. The two items that I have here in red are what is unique to getting a reverse mortgage. One is a required counseling. And this required counseling is really protection for you as a senior who's getting a reverse mortgage. And it's one of many changes that were put in place for seniors getting a reverse mortgage. And the idea behind it is very simple. The idea is that if you are meeting with a reverse mortgage professional and that person hasn't fully informed you and hasn't fully educated you on all the ins and outs of a reverse mortgage, the idea is that when you speak to a required counseling counselor, that person, the counselor, is talking to you on the phone and saying, Mr. and Mrs. Smith, did Benny explain to you what your obligations are, even though you don't have a mandatory monthly mortgage payment, in the sense that you're supposed to still pay property taxes, you're still supposed to have homeowners insurance, you're supposed to maintain the property. If there's a homeowners association fee, you're supposed to pay that. It's a checks and balances onto the fact that you are fully apprised of and understand the obligations and everything about the reverse mortgages, and you fully explored all other alternatives, okay? That if you're gonna be in this house only for 2 years, nobody's trying to sell you a reverse mortgage and tell you that that's your best option. Then we get to the elephant in the room, which is the mortgage insurance premium. And this mystery expense, which everybody seems to be terrified of, and I always use the joke that people, when I tell them about a mortgage insurance premium, they're running out of the room yelling and screaming and cussing at me, or if they're close by, they try to swing at me and tell me, how much are you trying to tell me that this is going to cost? This is the big ticket item. So in line with what I started the video with, if you don't understand what this encompasses and what you're paying for, you have every right to be upset. Okay, look, there's a reason that a Rolls Royce costs $400,000, and there's another reason that a Hyundai costs $25,000. And nobody's, in some sort of a mystery as to what the difference between the two is. But when it comes to this mortgage insurance premium, nobody is breaking it down to tell you what it is. Well, I'm just going to lay out the parts of it, and in the subsequent videos that we're going to do, we're going to explore and we're going to go deep, and we're going to have drinks and we're going to have laughs, and we're going to sit down and we're going to make you feel so comfortable with this that you're going to be like, thank God I have this option to not only do the reverse mortgage, but to have this protection in place. Because by the time I'm done explaining it, and the fact that you don't have the protection of the mortgage insurance premium because you don't now have a mortgage insurance, you're going to wish you had the benefits and features that come with the reverse mortgage, and that's partly because of the mortgage insurance premium. I know it's a big order to fill, but I'm up to the task. I'm dressed in my Santa best for Christmas. We're going to explore the topics of what is a mortgage insurance premium. in its nature, in its essence. I've already referred to the idea that it's obviously insurance similar to what you have in the sense of homeowners insurance, in the sense that you remove the liability from you and you put it on an insurance company. So it's obviously a form of insurance and it requires a premium. So we're going to go further into that. What does it include? What does it cover? And who does it protect? The borrower, the borrower's estate, and the lender. This is key for you to understand because you don't have this right now in your traditional mortgage. And I'll show you why this is crucial to you and why people in 2008, 2009, 2010 suffered because they didn't have this in place. Who gets paid by it? That's crucial because if you automatically and instinctively think it's a lender expense and these bastards at the bank want more money, you're going to be resentful because you're like, we already paid them with the lender fee. What the hell do they want all this money with mortgage insurance in their pocket? And so if you understand who gets paid by it, then you're going to not have the impression that you do. And, to kind of give the secret away, when you go to buy a car and you're at the car dealership and you buy a $50,000 car, and part of that expense is a massive amount of taxes and DMV fees for licensing that the auto dealership is collecting on your behalf to forward to the DMV, you inherently understand that the auto dealership finance department is collecting this on behalf of the DMV. This is the same exact idea. So the answer to the idea of who gets paid by it, the bank is not getting paid by it. The bank is collecting it on behalf of a third party. Who is that third party? We're going to explore it and we're going to see why that is. Well, why is it needed? Because your current mortgage doesn't have it, and why are you okay not having it? Well, you don't know that you're not okay by having it. You think you're okay by not having it. But I'm going to show you why you need it and why the fact that you don't have it can be a potential liability to you. But we're going to show, as in the context of what it means to have it in a reverse mortgage, why is it needed? Well, the big $2 million question, I guess, is more than $2,000. The $2 million question is, how is it paid for? When is it paid for? And who is it paid for by? And it's kind of funny, the way I say that is, who is it paid for by? It sounds like you're not paying for it. And to me, you really are not paying for it. And well, don't look at me. It's not my house. I'm not paying for it. It's your home that's paying for it. And we're going to explore that, and so that you don't lose sleep overnight thinking, who's going to pay for my mortgage insurance premium? It's your housing wealth that's paying for it. It's your housing wealth accumulation, and it's taking a minute fraction of that money and buying you this protection. Okay, so why don't I have it now? We're going to explore that. When is it going to be used for my benefit? In other words, you understand that right now you have homeowners insurance, and God forbid, if your house got caught fire, that it's going to be used for your benefit. Why? Because A, it's going to be paying back the lender. And then it's also going to reimburse you for your losses in the fire. So when is the mortgage insurance premium going to be used? Because it's not like fire insurance where your house gets burned down. Then we have alternatives to the reverse mortgage for the senior. And this, is a sensitive topic to me because we just finished a 4-part series where I talked about seniors that, according to the Consumer Financial Protection Bureau, since July 1st of 2021 last year, there are a number of seniors, 682,400 seniors, who are now delinquent in their mortgage payments. And of those numbers, 83,000 of them are facing foreclosure. And if you understand the significance and the severity and the importance of not having seniors be burdened with having a monthly mortgage payment, then that goes to the alternative idea that what is available if you don't get a reverse mortgage and the danger that it places you and why you don't want to be in that position. And ultimately, the big question that you have now salivating and sitting there saying, get me to the punchline is, how much is it and what is the formula used to calculate it? Because until I put a dollar amount to it, you're not going to know what it is, and you're not going to know what I'm asking about. And I want to keep this as the last point, because until you have all of this, you're not going to have a proper perspective. And everything goes back to perspective. If you don't have perspective in understanding what the benefit of a reverse mortgage is, if you don't have perspective in what the cost is and what you're getting with that cost, if you don't have the proper perspective and education that it's not money coming out of your pocket. When you have a $1,500 yearly homeowner's insurance, you're going into your bank account and you're literally taking money out of your bank and you're paying the insurance company. Nobody's asking you to pay $1 out of your pocket to do this. In fact, in getting a reverse mortgage, the costs that you're going to be associated with out of pocket is going to be an appraisal, and it's going to be the required counseling. And I think counseling is about $150, and it takes about an hour. And even if you're really strapped and that becomes an issue, then there could be a conversation to be had with the counseling company to delay that. And if your appraisal is something that's going to really cause financial hardship, and you work with somebody who really cares about you and wants your best for you, then you can have a conversation and say, look, I can't, if I pay for this appraisal out of pocket, then it's going to cause financial hardship to me. And they should do their best to cover this appraisal fee so that it's part of the loan overall costs. Now, to the second part of this thing, and I'm trying to make it so that it's not too long in the video that I'm doing. But the reason I want to put everything in one video as it relates to this is because I want you to have a perspective. So when the objection is that it's too expensive and it costs too much, I think of it as you really are not, you're not grasping the value of a reverse mortgage. To me, the fact that a reverse mortgage is even available, is an option, is a consideration, is such an incredible blessing, because there's nothing like it to be able to extend the protections and the benefits that a senior needs in their retirement. When you think about the fact that seniors are now living longer, not having enough savings, coming into the retirement with substantial amount of debt and minimal amount of savings, and with a mortgage payment that can last 10, 15 years, then what is going to be in the position that they need in order to help them with? Well, that's the reverse mortgage, okay? But because reverse mortgages have been vilified, have been crucified, and have been painted with such a negative picture, then the fact that they even exist is not, like, as far as I'm concerned, it's a mathematical miracle. I know it seems like a big word to use, but let me ask you this. If I were to meet you in some event and we were talking and I didn't tell you I do reverse mortgages, and I said to you, I was able to do something special for my parents, and the way it worked out is that through this thing that I did for them, here are the features and benefits that my parents now have, and what do you think about it? And I said to you that I was able to pay off their current mortgage balance so that they wouldn't have to have a continued mortgage payment to the bank going forward for the rest of their life. That's just one thing that I was able to do. And by not having them make this monthly mortgage payment that was otherwise required, I freed up monthly mortgage payment to use for their other expenses. So in other words, my parents used to have to make a $2,000 payment, but after I did what I did with them to help them, they can now take that $2,000 and pay for their other obligations, like the mandatory property taxes and homeowners insurance, which everybody's supposed to have. A portion of that goes to that. A portion of it now pays for their Department of Water and Power, their gardening, their shopping needs, all these other expenses. But I was able to do that by eliminating their overall monthly mortgage obligation and not having to pay that. I was also able to extend their reserves and their savings, because now they didn't have to tap into their reserves and take money out of their bank account every month to help make the mortgage payment. So I extended their reserves and their savings. Well, guess what else I did is that because they would have eventually run out of the savings and reserves and they would have been facing foreclosure, I have basically eliminated or significantly reduced their risk to having a foreclosure, because the mandatory monthly mortgage payment is not mandatory anymore, which is significant. Another thing I was able to do for my parents is that I increased their housing security for both, because if my father passes away, then my mom, who was depending on that income coming from my dad's Social Security and his income, his pension, is not now left in the wilderness without that money. Yes, she could maybe petition and get a step up and get a higher Social Security payment, but she's not going to double dip and get both Social Securities, and you understand that. But as a result of me doing this favor for my parents, they no longer now have to worry about the other spouse passing away and them being shorthanded. Well, I was also able to put them in a position where they can have a line of credit because they have so much equity in the house and because the balance of the mortgage was relatively low. So now they have a standby line of credit that's in place. And this line of credit has certain features and benefits. One of them is that there's a growth factor, so that as the line of credit sits there and is not used, it's going to increase over time. And when my mom needs it 5 years from now, there's more money available to her 5 years from now than there is today when the line of credit is open. Well, what else is there? Well, the line of credit with the one that I got her, not the HELOC that somebody else has, my mom's line of credit can't be reduced, closed, or frozen by the bank. Well, what's the significance of that? Well, if you were around in 2008, 2009, and you saw those people that had lines of credit that were frozen, then you understand the significance. You didn't suddenly get a letter that said, Mr. and Mrs. Jones, we're sorry to inform you that your line of credit has been frozen, and unless and until you pay off your existing balance on the line of credit and show us that you have enough substantial worth, we're not going to open it again. Well, what else? Well, the line of credit, when my mom does decide to use it 5 years from now, is not going to reduce or require monthly payments. And that's huge, because she could have a $150,000 line of credit and she could take that money and not have to make monthly mortgage payments. And again, I covered also the loss of income spouse. This I want to be our framework for what you're getting when you're getting a reverse mortgage. This side is the benefits, which really, if you think about it, is an incredible blessing to have when you go into your retirement. And this side of it, which has to do with what you think the costs are, which is keeping you hesitation, is a perspective change, is a shift in your mental attitude, so that you don't get triggered and you don't run out of the room screaming that Benny's asking me to pay for a reverse mortgage insurance premium out of my pocket, which I never have. I'm going to flip this and show you something which to me is perfectly representative of the conversation about perspective, because I think it's really unique. So I don't know how well you can see this, but I'll point it out so you can kind of see it. And to me, as soon as you see this, there's two things that appear to you. You either see the goblet, which is outlined here, which is like a goblet, or you see the two faces that are in black looking at each other. And both of them are there. You know, there's like simultaneously, both are present. The reason I highlighted it so is that it tries to appear itself a little bit more readily, but the goblet is in the yellow and white, and it's the outline between the two faces of people. This is their nose, this is their lip, this is their chin, and it's both the same thing. And it's really amazing. I mean, all you got to do is go on the internet and Google faces facing each other, and I think this picture will come up. The reason to me this is important is because my perspective, because of what I do and I see the benefits in helping reverse mortgages with seniors, is that I see the benefits, the features, and the blessing that the reverse mortgage is. You may see it as a financial nightmare, a burden. You get caught in the cost aspect of it, I'm going to lose my home. You're going to go down the rabbit hole of watching all these YouTube personalities which I say personalities because to me there is no personality in representing falsely what a program that is designed for seniors to benefit them and mischaracterizing it as a scam can be anything but a mistake. But I want to be upbeat and not go down the negativity road. These series of videos are going to be in my playlist, and they're going to be under the heading of the costs associated with getting a reverse mortgage. Unless and until you have a different view, and unless and until you're able to see both of these things at the same time, not exclusive of each other. You can see the goblet, but you could also see the faces. You can see that there is a fee, there's a cost associated. Of course there is. There's a cost associated with everything. There's a fee associated with everything. And in this example of having reverse mortgages, the costs and the fees are well worth it, because if you understand what you're getting here, if you value the proposition that a reverse mortgage protection offers you, and the fact that you're going into a 15, 20-year period of your life where you're not working, you will benefit from these features and protections. You know, it's funny, yesterday I met with a dear friend of mine, and we were having lunch, and a gentleman came by. He was older, and he was sitting at the table across from us, and he used to be a business litigation attorney. His name is Ralph, and if you're watching, hello Ralph, and Merry Christmas to you. Wonderful to meet you. And I said to him, and he was so like energetic and excited, and he said, yeah, I'm in retirement. And I thought the way he talked about it, I thought he had just retired like a month ago. I go, well, how long have you been retired, Ralph? And he said, 17 years. And it just floored me, because I'm like, I thought he's only been in retirement for, a couple of months. He was so excited and so full of life and so many things to do. And he wasn't like an 80-year-old. Okay, that's my point. We're going into a period of your life where you can be looking at 20 years ahead of you. 20 years ahead of your spouse. And do you really want to continue making monthly mortgage payments? If you do, why? If I can have you with the reverse mortgage, have the protection of housing security so you could stay in your house for the rest of your life, and have a portion of your equity, which is your housing appreciation wealth, which by the accounts that we now know are over $10 trillion for seniors, why would you not want to access a portion of this money and to benefit from it? Because these features are there for you, because the protection of housing can be permanent, because the benefits are there for you, the insurance premium allows the lender to not have you make monthly mortgage payments. And when you don't have to make monthly mortgage payments, all these other things that come with getting a reverse mortgage automatically open up for you, and they become available. All right, I will start on the series of videos talking about the expenses and the features and the benefits of the mortgage insurance premium. To close, I want to thank you. I want to wish you a Merry Christmas. I know Merry Christmas is only one day, so every other day that you'll watch this past the Christmas day is going to be me wishing you Merry Christmas, possibly when you're watching this in July and you're by the beach and you're going to laugh. But I wish you safe holidays. I wish you and your family all the blessings, all the joy, financial independence, financial dignity. And if you're stuck on this idea of moving forward with the reverse mortgage and you can't see the benefit of it, and it has to do with some sort of what you think is an evil characteristic of a reverse mortgage that I have not addressed in my playlist with my videos that you are particularly uncertain about, reach out to me and let's see, because if you're stuck with it, maybe somebody else is, and I could help you out with both. Please share this with other people that can benefit from it. If you're a financial planner, if you're an elder law attorney, if you're a CPA, please share these with your clients. And I look forward to seeing the video that will follow, God willing, tomorrow. Thank you very much. Happy holidays, happy Hanukkah, best wishes, and see you guys on the next video. God bless you.